Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Friday, the 27th of October, and we have as our guest today, Lee Kian Soon, CEO of Astral Asset Management, coming out to us from Singapore. Now, Kian Soon, it's always great to have you on the show.
Good afternoon.
Now, Kian Soon, before we get your insights, as always, let's take a look and see how markets have performed across the region. We will start with cryptocurrencies, though. Bitcoin is taking a little breather. It's at 34,096. It is down 1.72%. Ethereum is at 1,793. It's down 0.81%. Now, looking across to regional stock markets, we start with the SGX, where you're at, Kian Soon. The SGX is down 0.24%, but that bucks the trend because the rest of the region is in the green. We have the KLCI, which is up 0.17%, Shanghai, which is up 0.39%, the ASX All Ordinaries, which is up 0.26%, the Nikkei is up 1.24%, the Hang Seng is up 0.99%, and rounding up the numbers, we've got the Kospi, which is up 0.25%. Kian Soon, your views on market performance in the first half of the day?
I think the market performance has been good, probably a sigh of relief as the European central banks have made the decision not to raise interest rate this round, as well as very positive news coming out from the third quarter economic data in the United States.
Okay, so here is the dilemma then, Kian Soon. On the ECB side, they announced the pause after basically raising interest rates by 4.5% since the middle of last year, since last July. Now, and that's really, if market investors look at it, is really concerns around economic growth prospects in Europe. What's your take on this, and how do you think investors should react?
I think Europe has been rising the interest rate by 4.5% since July 2022. Following the rapid rise that the Fed central bank has done. So as a result, you could see the interest rates are around 4%, 4.5%, and that has caused the economic situation in Europe to slow down quite considerably. And I think they're taking a breather, taking a step back to see how the situation evolve. Because I think they are also worried that they might enter a phase of stagflation, where economic growth is very slow, but at the same time you couldn't tame inflation, and that would be a more major problem that they're coping currently.
Now, on the US economy side, however, things are humming quite nicely, although we are seeing signs of increased inventory and perhaps the US consumer running out of savings to spend.
That's correct.
Is this the end of the road for the US consumer spending then?
I think if you look at the third quarter numbers, they're pretty positive. It's one of the stronger performance for US economic data we have seen so far, and the market heave a sigh of relief. I think your question pertaining to the fact that is this the beginning of the end is a very good one. If you drill further down into the numbers, you will realize that first the economic performance is probably one time made out of a lot of built out inventories. Secondly is if the consumers numbers are going to continue, especially in the fourth quarter. I think my sentiments and perspectives is that this is going to be a one time, and probably going to see a slowdown in the fourth quarter as economy starts to slow down, and the fact that the full employment as well as the COVID pandemic money that has been distributed starts to drain away.
Now, Kian Soon, you've been an advocate of really the premise that inflation is going to be around for longer, and therefore we're going to be having higher interest rates for a longer period of time. You've been saying this for. Do you still hold that view, or is your view even more bearish now?
I think given the emergence of a second war front in the Middle East, it's very likely that inflation issues is that's not going to go away, given that the energy prices is definitely going to take a hit if the Middle East situation and crisis escalate. And if that is the case, and if inflation is not tamed, at least I would foresee that the interest rate is going to remain high for a much longer period of time. I know the market has a lot of expectations that interest rates hikes are going to pause completely. I think this is unlikely to be the case. As you will see that the case for interest rate hike in the United States in December, it has increased to around 40%. So it's around half. Versus the earlier expectation that that's not going to happen. And for next year, I think general expectations previously was for interest rate to drop by about 100 basis points by 1%. I think we have to wait and see whether this will happen. If the inflation problem is not addressed, I think we can continue to have another 12 to 18 months of high interest rate situation.
And so this will then obviously fuel a swing away from equities, because if you've got such high risk-free rates from bonds, given the uncertainties geopolitically, well, we have two major wars, a second one about to literally take place. With all the uncertainty, for me as a risk-free investor that's relatively risk-averse, it may be easier to just park my money in bonds.
That's what we have seen. We have seen so far in the market. We have a lot of advisors advising investors to take a step back, to start allocating to bonds. Psychologically, the 5% mark for the 10-year US Treasuries has always been a challenge for equities, because like what you have pointed out, investors will start finding that I get a 5% return, placing it into a much safer kind of asset class, that i.e. the US Treasuries, and also adopt a wait and see approach, right? As you rightly pointed out, there could be two wars that is happening concurrently, which creates more uncertainties over the next 12 to 18 months.
On that note, Kian Soon, thanks for your insights this Friday afternoon, and thanks for coming on the show.
You're most welcome.
Now, we've been speaking to Lee Kian Soon, founder of Astral Asset Management, coming to us out of Singapore. And this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.